Factor in the fact that the central banks have been using the Western suppression against us by accumulating more gold than at any time ever in the history of central banking over the last 2 years. At some point, gold needs to accurately reflect the massive central bank buying, the huge amount of inflation in the system. It's done, they'll try to paper it over and kick the can down the road. But at some point, the realization by the rest of the world is, we don't want your money anymore. We don't want your debt anymore. And I think that's one of the reasons you've seen gold go up in the face of rising interest rates.
Is a dollar panic, and because the dollar is explicitly a gold derivative now, once the trust in gold goes, the rush to silver begins. We've seen it 3 times. We'll see it again. Exactly when, we don't know, but the point is, what's the endgame ratio? The endgame ratio is the 15-to-1 gold to silver ratio. That is a monetary panic, no matter what the dollar numbers for these metals are. Once they're 15-to-1, that's the bell. That's when you got to start spending.
In today's episode, 2 finance experts, Andy Schectman and Rafi Farber, talk about their insights and experiences with the commodities world. In today's show, Andy and Rafi will discuss the key catalysts for gold and silver to kickstart a massive bull run in 2024. The precious metals fundamentals have never been better, as there's a massive amount of debt piling in, a looming recession, and inflation fears are on the rise. If you like the world of commodities, this video is for you. Watch the video to the end, hit the like button, smash the subscribe button, and turn on the notifications bell so you do not miss out on our daily market commentary. Enjoy the video.
That once we reach a 15-to-1 ratio again, not exactly 15-to-1, I'm not saying wait for that number and then spend everything, but once we get closer to it, like 25, 20, you should start spending. At that point, I don't think the dollar is going to be acceptable in commerce, really. Maybe in the same way that maybe a peso in Argentina is acceptable because someone's going to exchange it immediately for dollars. Like a dollar might be acceptable because somebody who's going to accept it is going to exchange it immediately for silver. But you'll want the silver directly. So yeah, it's not like you were going, the point isn't to buy silver at, let's say, $25 and then sell it at, I don't know, whatever, 300, whatever it's going to be, and then take the dollar profits and then you're going to be rich, right? That's not going to be the environment. The environment is going to be when nobody wants dollars, so who cares about what dollar profits you're going to make? You want the stuff so you can buy things for your life, right? We're not going to be exchanging them back into dollars. We're going to be buying things with them because they are money. So then what is the most recognizable form of money? It's probably going to be constitutional 90% junk silver, because people will still recognize dollars. They'll recognize half dollars, quarters, dimes, those kinds of coins, American. I mean, if you have junk silver of your local country, then probably if I know in Australia they had silver coins until 1966, so you want to get those, and those have very low numismatic value, which I think is good for spending money, because numismatics are basically art, and there's nothing wrong with art, but you're not going to be buying food with art. You're going to be buying food with money, and so I would get away from numismatics. If you collect them, that's fine, but I know you're collecting art. And bullion coins, preferably of your country, but I'm sure that 100% bullion coins of any nationality will work in an emergency. I don't think it's going to be that much of a problem.
Factor in the fact that the central banks have been using the Western suppression against us by accumulating more gold than at any time ever in the history of central banking over the last 2 years. At some point, gold needs to accurately reflect the massive central bank buying, the huge amount of inflation in the system, the epic monetary expansion that we've seen, and now the Fed moving away from. I think there's anything they can do to stop this, because this is a lot more than what happens here in North America. In fact, it's what's happening around the globe. And I think around the globe, these people view gold and silver as money. And that's why you're seeing different prices on the Shanghai Gold Exchange. That's why you're seeing deliveries out of the ETFs or exchange for physical or price be damned, and just massive central bank acquisition. So whatever they do on this micro basis, sure. That's why, I would say micro is emotional, macro is logical. You look at things from a micro perspective, you're missing the whole boat. You get all tripped out and emotional and freaked out and make the wrong decisions. Take a step back and ask yourself, the Congressional Budget Office says in 7 years, every single penny of income tax goes just to pay the interest on the debt and mandatory entitlement spendings. That doesn't even take into account the costs of all these new immigrants, illegal immigrants, and who's going to pay for them. And, at that, ask yourself, how do we remain the world dominant military and financial superpower when every single penny of discretionary spending, including military, has to be borrowed? And the answer is you can't. So the macro perspective is, it may have an impact today or tomorrow or next month or whatever, but ask yourself how this all plays out in a few years. And, 7 years is probably more like 4 or 5 years. I don't know, but I certainly don't envy the Fed chair or the Treasury Secretary's job right now, because in both cases, I don't see a way out of this without ultimately paying the piper. And we should have paid the piper in 2008, and we didn't, and we papered it over. So they'll do what they've always.
In today's market commentary section, we want to discuss how recently silver found itself in the spotlight after hitting a 7-week low at $20.50. But here's the plot twist. It didn't stay down for long. Silver rallied back to nearly $23, and the reason behind this resurgence lies in bets placed on a crucial decision by the Federal Reserve coming up in March. But why would they cut rates? Well, despite a rather stubborn increase in the United States Consumer Price Index, CPI, for December, there's a growing belief that the Fed might just take the plunge. Inflation, which measures how prices for things we buy rise over time, has been hanging around at 3.4%. So what does this have to do with gold and silver? Well, when the Fed makes a move like a rate cut, it can send ripples through the financial world. Investors turn to precious metals like gold and silver as a hedge, a way to protect their money when things get shaky. And that's why silver, after that initial dip, showed signs of life. People are betting that the Fed will start a rate cut campaign in March. And they're not alone in this belief. According to the CME FedWatch tool, there's around a 68% chance the Fed will go ahead with a 25 basis point, bringing interest rates down to 5.25%. As we've learned from recent developments, the precious metals market is undergoing exciting changes. The World Silver Survey 2023, as reported by the Silver Institute, highlighted a remarkable 29% increase in silver jewelry production, reaching a record-breaking, the highest level in the survey's history since its inception in 2010. Silver's resurgence is just one facet of the story. Andy Schectman and Rafi Farber, our expert guests, bring a wealth of experience and knowledge to the conversation. They'll share their insights and experiences in the commodities market, helping us understand the driving forces behind the potential bull run for gold and silver. If you appreciate the content, please show your support by hitting the like button and subscribing to our channel. Don't forget to activate the notification bell to stay updated on our daily market commentary. Enjoy the video.
Yields are, we're watching the world, I think, have a good portion of the world who has been our creditors say, I think you don't have to hold treasuries with your surplus. You can buy real commodities. And I think gold, what it's done since 2020 is a good example of that. No one, if you asked a money manager, would it have been over the last 4 years a good way to safeguard your money in gold? And most people wouldn't even have a foggy idea on that. But from 1773 to 1943 in the last 4 years, it's making steady, solid gains. And I think that's the point here, is that from a historical perspective, treasury bonds do not have a long history of being considered an asset. And I think the world is reevaluating it. And we've talked about how for the first time in 45 years, the 10-year treasury is more volatile than gold. Silver will have its day. Silver will slingshot. Silver is just as important from a monetary perspective in my mind as gold, but it is less recognized. It is more manipulated. It has a larger concentrated short position, but it has far more utilities and uses. It is strategic. It is far more strategic to me than it is industrial. And I think the old adage that you can only manipulate a market for an extended period of time is to push it in the direction that it is going. And for a long time, no one wanted these things. They just wanted treasuries and dollars and US-based real estate and securities and whatnot. And I think those times are changing. I truly, truly do. And so, no, I don't think there's anything they can do that can derail this, but certainly they can, knock it back a couple of steps and make people question what they're doing. And should I really be doing this? They're good at it. But ultimately, no, I don't see there's anything they can do that will have any real substantive effect on where gold and silver will end up at the end of the year.
No. So does silver feel like it's a money? No. But is it actually money? Yeah, it still is. And there is proof of this because 3 times since silver was demonetized in 1873, 3 times since then it has returned to the original bimetallic ratio with gold, which was 15.5 to 1, something between 15 and 16 to 1 historically. I don't remember the exact number, but 3 times it's happened, right? In 1919, post World War I, it happened in 1968 when the London gold pool fell apart, and it happened in 1980 when there was a dollar panic. So that means that 15 to 1 ratio means that the public is returning to silver as money. And why would that be? Well, there's really no need for silver when you have a functioning gold derivative. Let's say that we had the perfectly honest Federal Reserve or whoever to manage the dollar, and they printed it one to one at a constant ratio with the gold that was mined, and everything was 100% honest and perfect, right? So then there would be no need for silver as a monetary metal at all. You could just use the dollar derivative, the gold derivative. But when the people start to suspect or understand, that the gold derivative is not honest anymore, then yeah, they will buy gold, and they will also buy silver, because if a gold derivative doesn't work, you're gonna need silver for retail purchases because gold coins won't work. And I'm not saying that it's like the average grocery shopper, retail level grocery shopper says, "Oh, well, I have to buy silver now." This happens in the plumbing, in the deeper recesses through the Fed's balance sheet. But
what do you think of today's show? Do you think 2024 will be a good year for gold and silver? Are you buying more gold and silver, or are you a net seller at these prices? Post in the comments section down below your strategy for your commodities portfolio, as it's very important to us to know what our viewers are doing. Thanks for watching the video till the end. Share it with a friend that owes you money, and I see you on the next one.